Hello and good morning, everyone. Thank you for joining another session of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be looking at the top highlight events that we need to watch for the week. So we'll be talking about what happened last week, what's in the economic calendar this week, and after that we'll do some technical analysis to try and understand the prevailing chart patterns before we proceed with trading for the week. So as usual, I would like to begin with a disclaimer that this session is very educational. It's not an investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So let's begin with what happened last week. So last week we had two data points that were very important. And one of them was the GDP from the US, and the other one was the PCE price index. So from what we saw with the GDP, there was a big shift. So we expected 1.2% economic growth for the US in the first quarter, but in return we got 1.3%. It was higher than expected, but also significantly lower than the previous number. It still shows a US economy that is currently very strong. Then we move further downwards on Friday. We had the CPI flash estimate. Sorry, this is for the Eurozone. The core PCE price index was the one for the US, which came in slower than expected at 0.2% for the previous month. So in this case, showing that the inflation is moving further towards Fed's expectations. And as a result, we saw huge volatility swings happening over Friday. And now we are looking at even more data points. So the next most impactful data point was the meeting by the OPEC Plus nations over the weekend. So if you look at Sunday, there was a OPEC, the MMC meetings, and this happened all day. And the big news was that OPEC decided to expand the production cuts, which tends to be positive for the oil prices. So Asian stocks rose, with Japan's Nikkei gaining over 1.5%. The dollar index near 104.6 after Friday's mixed PCE data, while the euro traded sideways near 1.0846 ahead of the ECB decision. So despite the OPEC Plus decision, oil prices slipped, with Brent crude trading around 81.08 and WTI near $76, pressured by slow demand growth in China and rising oil stocks in developing economies. So we will be looking further into this because it's beginning to have a bigger impact in the price of oil. We're already seeing oil prices beginning to recover. So hopefully there will be some opportunities in there. So as for the week, we have quite a number of things happening. So first things first is that on Monday, it's usually a slow day. So we don't have major events happening on the calendar except for 4:45 p.m. I'll take it all the way back from around 4:30 p.m. Where we get manufacturing PMI for Canada. There is also 11:30 final manufacturing PMI data for the UK. But most importantly is the Institute of Supply Management manufacturing PMI for the US at 5 p.m. So these three data points has the potential of making a big move in the markets. So we could be seeing some volatility coming in from this one. So remember, manufacturing activity is a leading indicator of overall economic growth. And if we see a stronger economy, then we have already identified that it tends to correlate with a stronger dollar, a weaker economy with a weaker dollar. So in this case, higher than expected ISM manufacturing number should lead to a strong rally in the dollar. And of course, a weaker than expected number should lead to a much weaker performance of the dollar. So then we'll be looking at tomorrow, which is Tuesday, the 4th of June. We'll be looking at the CPI coming in from Switzerland. This is a measure of inflation, which is expected to increase slightly to 0.4% compared to the previous month's 0.3%. So remember, it's NFP week, so we'll be getting a lot of data points for the US job market, beginning with the job openings, which is a measure of the number of new jobs being advertised within the US economy. So this will be released at 5 p.m. on Tuesday. Then we'll get GDP from Australia at 4:30 a.m. on Wednesday. Then the ADP non-farm employment change. This is the second job market data report that will be released in the week. So this is 3:15 p.m. on Wednesday. Then we'll get the ISM services PMI. We'll get an interest rate decision by the Bank of Canada. So having seen inflation subside somewhat within Canada and getting closer to the 2% target, there is increased expectations that the Bank of Canada may actually go for a 25 basis point rate cut, which would move interest rates to 4.75%. So what does this mean? On one side, you'll notice that these interest rate decisions tend to be priced in, meaning that investors will be trying to front run the Bank of Canada. So that's one key important point to note going forward. And of course, it means that we could be seeing an extremely volatile Canadian dollar for the week. So be on the lookout for opportunities for Canadian dollar trades. So we'll be getting the crude oil inventories on Wednesday at 5:30 p.m. Of course, more volatility for oil. So if you're an oil trader, you might be very much interested with the inventories on Wednesday at 5:30 p.m. Then we'll get the interest rate decision by the European Central Bank or the ECB. So this will be happening on Thursday at 3:15 p.m. Of course, we also expect a 25 basis point cut, which means that we will be getting more volatility for the euro pairs. And of course, as I already mentioned, whenever we have big interest rate decisions to be made, you'll notice that the markets will tend to front run the announcement. So we could be seeing a much weaker euro going forward. And of course, now we have a favorite pair. If you're looking for extreme volatility, then that would be euro CAD, the euro trading against the Canadian dollar, where both central banks have to make interest rate decisions. Of course, you can take a volatile pair versus a less volatile pair just to be fine. Then the third data point for the US job market will be the weekly unemployment claims at 3:30 p.m. on Thursday. And then ECB press conference. Of course, the press conference will be discussing the policy decision. So very important at 3:45 p.m. on Thursday. Then later on Friday, we'll be getting two very important job market reports. And one is the employment change as well as the unemployment rate in Canada. And the most important event for the week, besides the two central bank decisions, will be the US non-farm payrolls, where we're expecting 185K jobs created within the month of May. And of course, this is in comparison with the previous reading of 175K. So we're expecting a stronger job market. So unemployment rate is expected to remain at 3.9%, while average hourly earnings are expected to have increased by 0.3% compared to the previous reading of 0.2%. So clearly, it's a pretty busy week that we are anticipating, and there could be more volatility incoming. So make sure to be on the lookout. So as we proceed, if you have any questions relating to the presentation, feel free to type that. So following last week's data for both GDP and the PCE price index, we are now seeing the Fed basically betting on earlier rate cuts than expected. So we could be seeing interest rates drop to 4.89%. And this is by May 31st. This was the expectation. So of course, we didn't have any cuts last time. So in this case, now we focus on the September. So we could be seeing a rate cut before on the September meeting, and this could bring in some much needed weakness in the dollar, having experienced a very strong dollar for the better part of the year. The labor market look ahead. So a slew of data on the labor market will test investor sentiment on the Fed's path in the week ahead. So the May jobs report is set for release on Friday. The Economist expects it to be a similar story to last month's report, with the labor market cooling from its hot start to 2024, but not entering a downright slowdown. So the report is expected to show that 185,000 jobs, non-farm payrolls, were added to the US economy last month, with unemployment holding steady at 3.9%, and this is according to data from Bloomberg. So in April, the US economy added 175,000 jobs. This is after the revision, while the unemployment rate ticked up slightly to 3.9%. So this is still considered a very tight labor market, and as long as it's below 4%, it's usually considered as full employment. So this means that the Fed is majorly focused on prices or inflation as a decision to decide whether to cut interest rates, hold, or continue hiking interest rates. So Wells Fargo's team of economists, led by Jay Bryson, wrote in a weekly note that strong job growth and upside inflation surprises to start the year led to the Fed to put its plan for rate cuts on hold until at least the second half of the year. But Wells Fargo expects the labor market to continue cooling from here on out. So job growth came back down to earth to start Q2. We think the pace of job growth over the next few months will look more like April pace. This is from Bryson's team. So US job growth slows in April, unemployment rises to 3.9%. So as you can see, it has been a total crash in the numbers. So only getting lower, with the latest reading being 185,000. So in this case, if we get a higher than expected number, then in that case, we could be seeing a much stronger dollar. And of course, if the number is lower than the previous one, especially according to forecasts, then in that case, then we should be expecting to see a much weaker dollar. So besides that, I'll be checking on the AI side. So sorry for that. I think there's a house fire disturbing my camera. So NVIDIA's broad earnings helped spark a rise in the Nasdaq Composite, which had its best May since 2003. But that moved soured over the past week on earnings from Dell. Dell like seriously missed earnings. Salesforce also missed earnings, and of course we had MongoDB reporting in the same week. So these three stocks have been a part of the AI trade at times throughout the past year, but they failed to impress investors last week, and that's why we had the big sell-offs happening in the Nasdaq, the Dow Jones, as well as the S&P 500 indices. But then late in the day on Friday, we started seeing these indices beginning to recover. And during the Asian session, we have seen them extend the recovery. So it could be a bullish week for US equity indices this week, but we are not sure. So we'll be following to see more data. So the so-called bulling on the stock market rally, in which a wide variety of sectors rise, was a feature of stock market surges in the late 2023 and most recently in March 2024. So it hasn't been on display in the market's latest climb to record highs. So what they're trying to say here is that the majority of gains last year were driven by the Magnificent Seven. These are the top 7 tech stocks in the US. And now we are seeing other sectors recovering. Remember when we mentioned that the utility sector is also doing well. So with these other sectors recovering, then the contribution to the rally is now more broadened or not concentrated on a couple of stocks. But still, we believe that NVIDIA is still a key market driver. So if we happen to see the stock of NVIDIA going down, then it could be an indicator that we have actually hit the top, and we could be seeing the market taking a dive from there onwards. So on the next part, I think it's important now we look at technical analysis, try to understand where the market might be headed next before ending the session. So as usual, as I mentioned, if you have any questions, feel free to type them in the live comment section, and I'll be happy to respond them towards the end. So good morning, Tony Duck. Good morning, Manabasto. Good morning, Jason, J Squad. Thank you guys for joining. There's a good question from Ike Jack. Can I come for training in Nairobi? No, right now we don't have any physical classes within Nairobi. But if you're close to Kitengela or Thika, then our offices are open and we have live classes happening, and they are all free of charge. So let's get on to the next part. And in this case, we cover technical analysis. So I have a fun trivia question. If you can see the photo or image on my background, anyone know what that is? All right. So this is the MetaTrader 5 trading application. So we'll be starting with the dollar index. Of course, last week was a big sell-off, with the biggest sell-off happening on Thursday, followed by further sell-off on Friday before the dollar found some strength. started to make recovery, and this morning, first 3 hours were negative, but since then we have ended all the early morning losses, and it seems like a bullish day for the dollar index after we have seen the dollar index attempt to make a recovery here, eventually breaking towards the lower side. So last week we found support here. Market rallied, go to the previous high, was unable to break and move higher. So after a slight break, market dropped right back in, and now we are facing another path to recovery. So in this case, if I was to remove everything from the dollar index here, and then we try to recalibrate the technical analysis, then we would potentially be looking at something along these lines as being the basis for support in this market. And of course, for the resistance, we could be using something along these lines. And of course, we have this area here, which is pretty important as a resistance area. Of course, having seen the dollar index being pretty strong, we could be working with Friday's high as well as last day's high. So potential movements for the day could be the dollar index continuing to make this recovery. And Monday being a low activity day, we could be seeing the dollar storing around here, which was the highest we saw last week. Last week on Friday, sorry. So with a strong dollar, we are seeing major shifts in trends, especially for Euro USD. Notice that we saw in the economic calendar that there is this expectation that the ECB eventually goes for a rate cut later in the week. So a rate cut would mean a much weaker euro, and you can already see the market beginning to front run the European Central Bank. So after the peak that we saw here on Friday, there was an immediate sell-off in the euro, and now the sell-off seems to be continuing. So without being overly aggressive on a Monday, then I think we should be thinking of working with the lowest price that we saw last week on Friday. So this was Friday's low, so we could be seeing the market headed down here to retest the area. So USD trading against the Swiss franc has been one roller coaster, also to say. So this area here has been an area of interest for the past couple of weeks. And now what we are seeing is the market finding support along this area again, where the dollar seems to be making a strong recovery and having hit this bottom this morning. Notice how there was a rejection last week on Friday. So today market goes down, fails to break the area and then bounces. So it has already erased the losses that we saw early morning. So the early morning losses are this price action from here down to this area. And now the market has erased those losses, which means that we could be facing a strong dollar for the rest of the day without being overly aggressive, as I mentioned. Since Monday is usually a slow week, then we should be looking at potentially the market making a rally and potentially getting to this area. So remember, none of these is a fact. It's only probabilities, and I could also be wrong. So we could also be seeing the market go back and retest this area. However, it seems more likely with a strong dollar that we continue seeing this momentum continue for the day. So for pound USD, we had this major support area here. So the market failed to break last week, having bounced from this area quite strongly. And now, if you were to check and see what we are witnessing here, there was this sequence of bottoms happening last week. And now it seems like the pound is breaking this particular trend line. And now, given the current momentum in the dollar index, it seems more likely that this break could be more pronounced, and we could be seeing the dollar continue to pressure the pound and potentially retest last day's low. It's also very close to the low that we saw on Friday, so we could also be seeing the market going for this. Of course, normally when you have a breakout, it's common to expect the market to do a breakout, retest, followed by a continuation. So it's within normal expectations to see something of this sort. So we continue observing the price action around this area here to see if there will be continuation in this break. So from the 1 hour chart, this is how it looks like. From the 4 hour chart, this is how it looks like. And from the daily chart, this is how it looks like. So you can see the topping pattern here. Market attempted to recover on Thursday, Friday, failed, and now on Monday, it seems more likely that we could be seeing some further downside backed by a strong dollar. So New Zealand trading against the US dollar seems to be pretty strong as usual. So potentially we could be seeing the market making a big run and retesting the previous high here. So notice that the bottoms seems to be now getting higher. So the trend line here was bearish. We started seeing equal lows, now higher lows. So this bullish momentum could continue for the day. So this one currency I'm making an exemption for. I believe the New Zealand dollar is still very strong and could continue making some strides against the US dollar. Of course, for them, they are not cutting rates. So the expectations for rate cuts are for the Bank of Canada and the European Central Bank. So in this case, we could be seeing some further upside. Of course, the Canadian dollar is pretty weak. In this case, we are seeing a very strong dollar recovery against the Canadian dollar after the early morning losses were erased. And now there's still more room for upside. And of course, without being overly aggressive, it seems more likely that the dollar could extend this rally towards the highest price we saw on Friday. So for Australian dollar, it seems like the Asian pairs are making a very strong case for a bull run. So it's a similar pattern across board. So in the morning, the Australian dollar makes a rally against the dollar. Then eventually in the Tokyo session, the dollar recovers. But now we are seeing as we enter the London session, the Australian dollar taking some more strength, and we could be seeing the market retesting today's high. So as for USDN, we expected the market to bounce strongly from here, eventually get to the previous high. This did not happen. We saw the market bouncing off the same area, making a rally, a pullback, continued pushing higher, and so far it seems like a lot of noise in this chart. So now, excluding all these, I think it's safe to assume that we are seeing this horn or shaped formation. So if I was to use this, then you would understand better. So this is the prevailing market pattern for USD JPY. So it's like a triangle, but inverted the other side. So it looks like a loudspeaker. And in this case, the trend line on the upper side is following this path, acting as the resistance. And then the other path is acting as support. And it seems like every time the market gets to either of both extremes, then it continues changing direction. So up, down, up, down, up. And now it seems more likely that the best of positions could appear if the market was approaching this area here. And of course, if the market was also approaching this area here, then this could be the likely areas to get the best of market entries. Of course, a break would mean we go down, and a break will move higher, but also we could consider a bounce. Let's say the market gets to the trend line, bounces and moves back downwards, then that could be an opportunity. But for now, it seems a little bit too noisy for me. I don't know if it's the same for you guys. So silver making a very strong case for form of recovery. So after hitting this support, you can see the size of the tails of these candlesticks is indicating a strong rejection of lower prices. So this is happening on a major support level. So we have already completed the M formation, which is basically representative of a double top, much clearer on the 4-hour chart. And then after the market completed the pattern, now we are seeing a very strong bounce. So in this case, I would be more bullish than bearish, having seen the market reject this support. So remember, silver tends to have a very high peak value. So if you normally trade with a lot size of 0.1, divide that by 5, go for 0.02. So if you normally trade 0.5, divide by 5, go for 0.1, mainly because the peak value is much higher and it's much riskier to trade silver than any other conventional assets. So for gold, we're also seeing some form of recovery happening here. So from the 1-hour chart, we had this breakout happening. It continued early this morning, but now we are seeing a pin bar followed by a continuation in what looks like we could be seeing some good evidence of buyers coming into this market, which means we could be seeing some strong recovery happening for the day. So in this case, I would also be very bullish on gold, especially if it happens to break above this area. So 23.28 is the current price level. I would wait to see if it breaks and crosses higher, because this was a previous support area. It could be acting as the resistance, but then if it breaks higher, then we bet on a continuation of the same. So the idea is still the same as last week, where the market bounced from here and went all the way up to this point, failed to meet our expected target, and now it's happening again. So we could be seeing the same theory playing out, and the market heading for the previous high that we saw on Friday. So Brent oil seems to be finding some good support here, especially after the OPEC news. So remember, the OPEC news happens on a Sunday. So today the market opened with a big jump downwards, but then made a recovery, pulled back down, and then made a recovery. And now, from what we are seeing here, it's more of a sideways momentum. So it doesn't seem at all likely that we have a strong trend in this market. So judging from the highs we have seen, it doesn't take a miracle to see that this market is literally just moving sideways. So we have this playing out here. Don't know if I'm accurate or not, but then if you remove this and you think of it this way, so since the open of the day, the high and the low, then this is what we are seeing. So for the new week, this is more likely the direction we are seeing in Brent oil, compared to the expectation of a big rally after the OPEC decided to extend the production or output cuts to 2025. So SP 500 made a pretty strong recovery on Friday towards the end of the week. So this morning, we have seen some good price action, and this started here with a slow climb. Then towards the open of the London session, there was a big drop, and now we are seeing the market making a recovery. So in this case, I would be pretty bullish here, expecting that this was a very strong entry. This is evidence of a very strong entry by buyers, and of course, it could potentially lead to the market retesting this area here. So this was the previous high that we saw last week. So we could be seeing the market retesting that. So the Dow is also following suit. So we are seeing something similar. And of course, if I was to be bullish in the stock market, then the Nasdaq would be my favorite candidate. So notice how the market hasn't pulled back to form any major set-offs or pushbacks. So now we are seeing the market struggling to break this area, but now it has broken. So which means that the next expectation is that we go for another resistance area, which was the highest price we saw on Thursday. So it's more likely that we could be seeing the Nasdaq going for this area. So if I was to choose a chart of the day, it would be the Nasdaq. Seems like the most bullish one. So we have a couple of things going on for the Nasdaq traders. One is that we held this trend line here. So if you remember this trend line, then you know that that trend line has just been broken. So this is the first thing, break of that trend line. And of course, it's a break, retest, and continuation. And of course, it's also important to acknowledge the power of this big momentum towards the end of the week, which is evidence of buyers making a very strong entry. So this could be a case for continuation. So I wouldn't be betting against that. So after the three companies missed earnings and we had this big sell-off, the market eventually made a strong recovery. And that has been the story of the Nasdaq since the year started. So Bitcoin eventually made a break. Today we are at 299K. So it seems like we have to adjust our trend right now from this area to this area here. And now it's approaching the same resistance as the previous high. So if I was to do this, then remove this, then it would eliminate any form of bias here. And now we have this chart looking like this. So let's see. So this has been our big triangle, big consolidation, which has been pretty frustrating for a majority of us. Seeing the market moving sideways is never fun. And now we are approaching the high of last week and the upper trend line here. So the idea is to identify this area, observe the price action. If there is a straight out break, then it would mean some further upside potential. So NVIDIA made a strong recovery towards the end of the day on Friday. So notice how the market was moving downwards, then it managed to bounce here. And it seems like as we look forward to the market opening today, there's a good chance we could be seeing Nvidia pushing for a new all-time high. So natural gas futures seems to be responding well. So since the OPEC extended output cuts, what we have seen this morning is the market making a big run. So we didn't have a strong rally in crude oil, but for natural gas futures, we are seeing this momentum happening since morning. So a good chance that it will also be extended into the London as well as the New York sessions. High grade copper futures, we had a breakout here. The retest did complete as expected, but eventually the market got to our target. So this is what we had analyzed last week. So there was this big drop, and it seems like the market is taking a U-turn after the strong rally at the beginning of the year. So sorry, at the beginning of the month. So we had this strong bullish momentum. So right from the open here, you can see the market gained about 14.48%. But now all those gains, we only have 1.79%. And it seems like the market is erasing all the gains. So as the market pulls back downwards, it seems more likely that it would be in order to be looking for areas along the resistance line to look for short selling entries. So notice how every time the market has gotten to this particular trend line, there was an equivalent big sell-off. So this has happened 1, 2, 3, 4, 5 times. And remember, as usual, the more trend line has been tested, the higher the probability that it will get broken. So in this case, we are seeing the market going for the same idea. But then we observe this price action area for potential break. If it doesn't break, then we continue betting on a bounce and the market goes further back downwards. But for now, it makes more sense to be more patient and look for a potential break or a bounce from this area. So that's it for the day. I think we have covered enough assets. And of course, for the UK FTSE 100, there was a big sell-off at the market open. So I thought it was important for you guys to note that there was this big sell-off happening in the previous 1 hour. And there's a potential that this could be evidence of sellers entering the market. And it's something worth considering or looking out to see whether there will be a continuation further downwards. So yes, it's a very interesting chart to be watching today. The UK FTSE 100 index. So we don't have much data. So this would be your homework. Do some research and understand why this is happening. Then we see a way forward. So I hope the session was good for you guys. So be looking at the questions. Happy new month, everyone. Let's make some profits and learn from the losses. Thank you, J Squad. So we already did USD card. Thank you. Good morning, Humphrey. So first question I'm seeing here is from Johnson Isa. So do you see the DXY index bouncing back as a result of an improving US economic performance? And is there any impact that the Middle East conflict reconciliations is likely to bring? So I'll be more focused on the weights in the S&P 500. Sorry, not in the S&P, but in the dollar index. So the dollar index is a measure of the strength of the dollar against a basket of 6 other currencies. The currency with the biggest weight is the euro. So having seen the expectation that the European Central Bank might cut interest rates this week, and of course we are seeing the Bank of Canada potentially cutting interest rates, then the two data points are bound to weaken the two currencies, and these could potentially lead to a much stronger dollar index, backed by the weakness of the two central banks that are cutting interest rates this week. So in this case, that would be a strong basis for an improving dollar index. Of course, the Middle East conflict reconciliations are also a part of the equation. There is the impact from the US side. That is the election cycle. We know the campaigns are really hot right now. So I'll be observing that too. And besides that, we could be seeing the non-farm payrolls on Friday, contributing to the strength or weakness of the dollar, depending on the number. But for now, I would be focused on the two central banks. If they actually go for rate cuts, then that's a very strong case for a rally in the dollar. So I'm still checking to see if I missed any question. This is a common question. How will gold trade against the USD? So as I said, this session is purely educational. We are not trying to predict where prices will go. So we already analyzed gold and saw that there was a very strong support here. So we said we are observing this area here, 23, 28, to see if the market will break. If it breaks, we go higher. But if it doesn't break, then it represents a potential case scenario of where the market breaks a certain support level, goes for a retest, and then continuation. So we don't know this yet, so we don't have the information. So if this plays out and the market continues, then it means we go for a short selling trade. But then if the market breaks above this area, then we go for a bullish trade. So it's a wait and see kind of scenario. And we don't have major news happening before 5 p.m. So morning, Abraham. Morning, J Squad. Morning, Wendy. I don't know what this comment means. It looks like terms and conditions template for FX Pesa. We operate from a regulated environment. We cannot give investment advice. That is true. A good question here, is the BOJ's intervention foreseeable? No, not even the best traders in Wall Street can tell when the Bank of Japan is going to intervene. So it's more of a wait and see, and just constantly monitoring the markets. How do you trade news in terms of determining a sell or a buy or actual previous? So we always try to interpret the news beforehand. So we lay down the scenarios. If this number comes at this point, then we should be expecting this currency to either strengthen or weaken. And that's what we do every single day in these sessions, Monday to Friday from 11 a.m. So we try to understand what are the key prevailing news. And then from there, we understand how they may impact the markets. And once we understand that, then we are able to speculate the direction that the market will take after seeing the data and the market reaction. So for instance, today in the afternoon, we will be looking at the ISM manufacturing PMI data for the US. And as we mentioned, if it's better than expected, then there's that expectation that the dollar will strengthen. Then if it's weaker than expected, then the expectation is that the dollar will weaken. So that's it for the day. Hello, Ian. Thank you for joining the session. I hope it was educative. I hope that you guys have a wonderful and peaceful day. So if you're just beginning to trade, make sure to check out the Novice to Pro course available on FX Pesa YouTube channel. And of course, if you're looking to begin trading and you don't have an account yet, check the links in the description below to register for a live trading account, get it verified, and begin your trading journey. So that's it. Enjoy the rest of your day.